It is Thursday, February 26, 2026, and another great day today, up about 2.16% for the day. For the week, 3.64, and for the month, still down 21%. But the 3 months still down 30.5%. Year to date is 34.5% down. But year over year is now 43%. All time 342. So another interesting day in the market. My secondary account Grievous is back up to break even, slightly above break even finally, after that rough earnings period that it's gone through. But if you guys haven't noticed, my buying power has also increased a little bit more. And it has to do with one of the top movers today. So Honest is up 21.21% off of news that they're going to be buying back stock. And I think it's like 20 or 10% of the company, somewhere around there. So it's a decent chunk. And it looks like they're finally making efforts to turn their stock price around. Literally right after I sell it, of course, because that's usually how things are. But it is what it is. I believe it's still like $2 or something, so it's nothing too crazy, still in the $2 range. But another top mover today is Netflix. So Netflix up big after hours, after announcing that they are no longer interested in buying Warner Bros. So it looks like Paramount is the favorite to buy out Warner Bros. We have this infographic from Morning Brew saying that their original offer from Paramount was about 108.4 billion, which was $30 a share, all cash. But then they juiced it up a little bit to $111 billion. Now, the biggest part about this enhanced offer is they're going to pay the $2.8 billion as a breakup fee for Netflix. So literally, Netflix just made $2.8 billion of free money. Literally, like no work. They didn't have to invest in a movie. They didn't have to run ads to try and get more subscriptions. They didn't have to pay any actors or actresses. Like literally, free money, $2.8 billion just to let Paramount buy out Warner Bros. And honestly, I think this whole situation just in general is crazy because in my personal opinion, Warner Bros. And HBO is a much, I guess, like more premium brand, is a much more premium, I guess, content base, or has a more premium content base than Netflix or Paramount. Just my opinion, right? If any of you guys like Netflix or like Paramount more than HBO movies, then I'm sorry, but just my personal opinion, I think Warner Bros. And HBO has a lot more premium content than these two. But for some reason, these two were the ones to buy out Warner Bros. Just because the stock price and the value of the company has been going down for the last 5 years. So it's just an interesting and somewhat unfortunate situation to be in. Because I guess like 10 years ago, you would have thought that it would have been Warner Bros. That takes over Paramount, right? But Netflix is going to continue doing their own thing. A lot of people are saying $100 is the price target for Netflix now that this whole cloud of Warner Bros. Are they going to buy it out? Are they going to take out more debt? What's their free cash flow going to look like? All this, cloud that's been hanging over Netflix stock has finally been lifted. Things are just going to go back to the way they were. Netflix is going to keep doing their own thing, keep pumping out content on their own platform, and Paramount is going to somehow find a way to pay back all their debt. But whether you realize it or not, this is actually a big moment in American history, in my opinion. Warner Bros. Is a big part of not just Hollywood history, but American history and culture, right? So it is a big moment if you are an American anyways. Another big mover today was Nubank. It looks like at least Nubank is going to be cooling off a little bit after this heated run in Latin American stocks. And even though my cash secured put for IGV, which is a software ETF, is up over $80 today, it does look like tomorrow it could possibly go back up in value just because it's kind of cooled off in the after hours. I mean, I guess it's making a small comeback in the overnight market. Anyways, the volatility looks like it's continuing because it was up a decent amount, right? Up over 2%. But then it was back down to 80, and now it's back up to 81.5. So volatility continues. I'm just going to sit back and collect my premium. Another thing that was somewhat volatile today is American Express. So it was up 2.5% today, but it looks like it gave it all back in the after hours market. So it's just more volatility continuing, right? And I think, moments like these where stocks are just extremely volatile, just taking big swings like Kava today, it was down 7% after a big green day yesterday, but then coming right back up to almost break even, just down 1%. So it's a very volatile and shaky time in the market. But like I said, usually that means it's a decent time to be a buyer of equities if you look back throughout history. If we take a look at my recent transactions, today I did sell a little bit of Netflix at a very good price, at least in terms of today, $95.50. I still have 10 more shares that I'm probably going to sell once it's enough to, selling 9 shares is enough to cover the original 10 shares cost basis. So I'll basically just have like 1 share left as a souvenir for Netflix. I'll probably dump it in my secondary account. But yeah, things are looking good. My buying power is steadily increasing. And if IGV here continues to go down and hovers around 80 or dips into like 79, 78 again, I will definitely be selling some more puts because I think software right now, the sentiment is very bearish. I think it's overblown. And honestly, it just doesn't make any sense because a lot of these software stocks today, Zoom, for example, Zoom today down basically 12% in one day, which is insane because Zoom, correct me if I'm wrong, but they have an investment in Anthropic, or one of the big AI players that everybody is scared is going to replace everything. They think OpenAI, Grok, all these Gemini, Anthropic, Claude, whatever, is going to replace all these software companies. Like every single software company in IGV, the ETF, is going to get replaced by AI. That's the fear right now. And I just think it's overblown because Salesforce, Zoom, a lot of these companies, Amazon, right? They have an investment in Anthropic. Correct me if I'm wrong, but I guess they're going to get replaced by their own investment. I don't know. So I did snag up 1 share of Zoom in my Roth IRA. Just because I only had enough money for 1 share anyway. But my Roth IRA is slowly creeping back up to 2,000 after a big pullback. I'm not sure exactly what it was. I think it was my leveraged AMD play that I had going on where I held it a little bit too long, so it came back down. But AMD was a big reason, big contributing factor to my performance here of 33%. But unfortunately, I did not sell when it was above 2,000. But anyways, I have this nice wedging pattern here. So hopefully this means that a breakout will be coming here shortly. But my number 1 position is Chipotle. So it does depend on that one. Sweet Green, of course. One stock that I've been scooping up slowly, Melly. My goal is to get to 1 full share of Melly in my Roth IRA. We take a look at my second account here that I started off with 5,000. I know it says 5,014 something. That's just because of transfers that I had into this account when I transfer shares of stock. So there are some fractional shares that I had in my main account that I just wanted to dump into here just to get it out of the way. But Disney is my number 1 position still. In my second account, and it's the NASDAQ that has been a loser recently. But I also have Robinhood, of course. Once Robinhood gets to $100 a share, I will probably sell 5 shares somewhere around there and just keep 1 share as pure profit. I do have Hess here as like a more dividend, a steady stream of dividends for my secondary account. Unum, which is an insurance play. It's one of the many insurance companies I've been eyeing. I've also been looking into Lemonade, of course. That's one I've mentioned a few times. And a Warren Buffett one, a Chubb. I believe CB is the ticker, I think. But I do have 5 shares of Unum in this one. I also have 10 shares of GameStop. I think technically GameStop is looking interesting, but also fundamentally because they are looking for an acquisition. I'm not sure where they're at right now with it, but it does look like there's going to be somewhat of a pump in GameStop here shortly. I do have 2 shares of Target as well as more of like a catch-up play to Walmart. And of course, I have 1 share of Amazon that has been disappointing lately, 1 share of Take-Two, 1 share of Simon Property, which is an interesting company. Simon Property Group, if for anybody that doesn't know, is a REIT. It's a real estate investment trust, so it's taxed differently. But another thing that they've been digging into recently is more like commerce plays. So I think they have their own website now, which is like an e-commerce thing that they have going on, but they also have a loyalty program for their malls too. So I think they're kind of interesting. You know, they're experimenting at least. It's not just a boring REIT that is that looks almost identical to everything else out there. You know, it seems like they're actually trying to be different and differentiate themselves. So you know, I'm up 6% on it, and it's a dividend play. So we'll see where that goes. But I also have 10 shares of Levi's, 1 share of Chevron, and then of course my fractional shares that I got going on here. A Meta, 0.17 shares of Meta. That was pure profit. For anybody that doesn't remember, it was an earnings play. I have half a share of Reddit. I think Reddit is interesting. Recently, they've been having some insider buying, same as GameStop, I believe. They've also had some insiders buy. And of course, Nike with the CEO of Apple and the CEO of Nike buying. But I also have 0.55 shares of IGV. I got 2 shares of Lyft that I tried to play on earnings, but they collapsed on earnings. But I think Lyft is interesting when it comes to technicals, like on the chart. And if any of you guys travel, for anybody that doesn't travel, Lyft is actually cheaper than Uber. So it seems like they have a little bit more upside when it comes to like flexibility with their pricing and growth, right? I think Lyft will have better growth than Uber itself, just because it's cheaper, right? It makes sense. It's just economics, right? But Apple, I do have a fractional share of Apple that was pure profit. I do have a little bit of Ralph Lauren, just 0.05 shares, just a fractional share. Fractional shares of Shopify is all pure profit that I traded into. Fractional shares of Microsoft, Visa, Elf. That was just me trading in and out, of course, just slowly building up equities in companies, which is why I named this account Grievous. But it looks like the overnight market here is doing very well. I was kind of worried that with all this volatility, today being so green was going to result in tomorrow being red, and that could still happen, right? But it does look like we're holding up, at least in the overnight market. And by the way, my first ever supporter of the channel, recently sent me a little bit of ETH. So I decided to transfer that into my Robinhood account. It's the 0.001999 of ETH, about $4. I think Robinhood right now is doing a crypto bonus, so I decided to just transfer that. And I think I'm going to do that every single month. So whatever I get from you guys, I'm just going to transfer into my Robinhood every single month so I can keep track of how much I'm actually getting. But I appreciate the 0.001999 ETH. And for anybody that doesn't yet know, I do have my own website here, which is the best way you guys can support the channel. I have some interesting ideas for what I want to do with the channel right now, but I'm still in the exploration phase of it. I don't want to spoil it yet, but I do have bigger plans for the website in the future. It's going to constantly improve. But as of right now, it's just a way to support the channel. And by the way, A recent stock that I mentioned that had a huge pop on earnings, Circle. I know for a fact a lot of y'all made decent money on Circle recently because of the earnings pop, but you guys aren't showing me any love. So if you hop over to my website and click up there at the top to spotlight your comment, you can show some love, ask a question, and it's only $3. So $3 Apple Pay to help me hit my goal of $10 here. I know for a fact I made y'all a lot more than $10 on that circle pump. So just help me hit my goal of $10 and buy me a coffee, and I will very much appreciate it. But there are some other options here. You can send Ethereum or USDC on Ethereum, or you can send Solana or USDC on Solana, of course. But I also have an XRP account for any of you guys that are into that.